In this section of That's Good to Know, let's talk about your net income versus your cash ending balance. Your net income does not equal ending cash. Why the heck not? Okay, let's explore. First, let's start with net income. Net income is going to be your revenues minus your expenses. And it's found on your profit and loss statement or income statement. Your net cash is your beginning cash minus your cash flow from operations, your cash flow from investing, and your cash flow from financing. And this is typically found on what's called a statement of cash flows. So breaking down the beginning balance, examples of what operating activities are: your rent, your sales, your wages to your employees, your supplies. So the expenses that runs your business, the operating expenses of your business. Examples of investing activities would be buying and selling assets. So maybe property, vehicles, equipment, that type of stuff, computers. And examples of financing activities would be any debt or dividends. So loan payments, you took out a loan and now you're repaying those. Those are financing activities. So you start with your beginning balance, plus and minus your cash flow from your operations, your investing and your financing, and then you come to your ending cash balance. Tax treatment. So you're taxed on your net income, not on your net cash or your ending cash balance. So that's where some business owners get into a little bit of trouble when they do not have cash at the end of the year to pay the taxes that was based off of their net income. Your ending cash is typically lower than your net income. Here's an example of net income versus cash balance. So you had sales of $10,000. It increases you by the $10,000. Your rent $2,500. So utilities $400. But then you decide to take out $5,000 in distributions. That does not affect your P&L. This is a balance sheet item. And then also a loan payment. So if you look at the math, your net income is $7,100, but your ending cash balance is $1,650. So things like distribution and loan payments affect your balance sheet, while they do not hit your net income, and your taxes is based off of your net income, that higher number of $7,100. Thank you for watching my video. If you enjoyed the content, please share. Also, if you would like to hear any other content, please comment below and you just may see it in the next issue of What's Happening. If you would like to meet with us, please check us out on www.wats.biz/appointment. We're also on social media. You can find us on Instagram, Twitter, Facebook, and LinkedIn.